I didn't understand the true power of compounding when I first stepped into the trading world, kid. Back then, compounding sounded like one of those textbook concepts teachers love to brag about: charts curving upward, interest piling on interest, numbers growing like magic beans. But trading isn't a textbook, and compounding and trading isn't the neat, predictable curve they show you in those glossy diagrams. No, the real power of compounding and trading reveals itself slowly, quietly, in ways you barely notice until one day you wake up and realize the trader you've become is unrecognizably stronger than the trader you were. The first time someone explained compounding to me, I nodded like I understood it. But the truth is, I didn't. Back then, I was chasing home runs. I thought the fastest way to grow an account was to swing big, take risks, capture huge moves. I believed compounding was boring, something for investors who didn't have the guts to trade. And like most young fools, I paid dearly for that belief. I still remember sitting in my tiny apartment after blowing up a chunk of my account on a reckless trade, staring at the chart and wondering how the hell I kept ending up in the same hole. That's when the old veteran who mentored me said something I'll never forget. Kid, compounding isn't about money, it's about behavior. At the time, I didn't understand what he meant, but I do now. Because compounding doesn't just happen in your account, it happens inside you. Every disciplined choice compounds. Every avoided mistake compounds. Every time you follow your edge, even when the market tempts you with noise, you're compounding the trader you're becoming. Conversely, every reckless decision compounds too. Every rushed trade, every oversized position, every lapse in discipline. Compounding works both ways, and that's a truth most traders learn far too late. The shift for me happened slowly. So slowly, I didn't realize it at first. It started with small wins, tiny ones, really. Profits so modest they felt insignificant. I used to shrug them off, thinking, what's 20 bucks going to change? But 20 bucks made consistently is more dangerous than 1,000 made once. 20 bucks represents control, restraint, process, and when you start stacking those small wins, something unexpected happens. Your confidence compounds. Not the loud, arrogant kind of confidence, the quiet kind. The kind that comes from proving to yourself, day after day, that you can stick to a plan. Then something else compounds your emotional stability. You stop panicking at every pullback. You stop chasing every candle that looks like a rocket. You stop feeling the urge to jump into trades just because they're moving. Your reactions slow down. Your decisions sharpen. Your mind clears. And while all that is happening inside you, your account, little by little, begins to shift too. I remember a 6-month stretch early in my career when I finally stopped trying to get rich quick. I traded small, very small. So small that friends who saw my profit and loss would laugh and say, "You'll never make it at that pace." But I didn't care. I wasn't compounding money, I was compounding skill. I was compounding discipline. I was compounding survival. And survival, kid, is the seed of every great trading career that ever existed. Then came the moment, the one every trader eventually experiences, the moment when compounding stopped being a concept and became a reality. My account hadn't doubled overnight, it hadn't exploded, it had grown slowly, steadily, predictably, like a tree putting down roots before it ever reaches for the sky. And once those roots were deep enough, once my discipline was automatic enough, once my emotions were quiet enough, the numbers started to compound, not because I was taking bigger risks, but because I finally earned the right to. That's the part no one understands. Compounding is not an equation, it's a privilege. You earn it with patience, with humility, with restraint. The first time I scaled my position size responsibly, not out of greed, not out of excitement, but because my plan, my results, and my discipline justified it, I felt something shift inside me. The account grew faster, not chaotically, not in spikes, but in waves, steady, rhythmic, honest. That's compounding. Not the fantasy curve in the textbooks, not the overnight success stories you see online, but the slow, steady force of consistency, built one disciplined decision at a time. Compounding is the market's way of rewarding the trader who refuses to self-destruct. And trust me, this world has far more self-destruction than success. I've watched brilliant traders burn out because they never understood the patience required for compounding. They wanted fireworks. They wanted action. They wanted to sprint. But trading isn't a sprint, it's a pilgrimage. A long, winding journey where the ones who last aren't the ones who burn brightest, but the ones who burn steadily. I've had years, entire years, when my growth came not from massive wins, but from avoiding massive losses. That's compounding too. The absence of disaster compounds just as powerfully as the presence of profit. And the older I got, the more I realized the most powerful compounding in trading isn't the compounding of capital, it's the compounding of character. Because a trader with character stays alive long enough for his capital to grow. A trader without character destroys himself long before compounding ever has a chance to work. The markets will test that character every day, tempt you, scare you, exhaust you. But if you stay steady, if you show up every day with discipline, one day you'll look at your account, at your habits, at your mindset, and realize something. Compounding didn't just grow your money, it grew you. And it took me decades to understand that the real power of compounding in trading isn't found in percentages or charts, it's found in recognizing that every small, disciplined decision is a seed, and if you tend to those seeds long enough, with enough patience and humility, they eventually grow into something far bigger than the numbers in your account, something steadier than any trend, something stronger than any setback, your identity as a trader. Because once compounding takes root inside you, kid, it changes the way you think, the way you react, the way you breathe when the market starts shaking. It stops being about the single trade, the single day, the single week. It becomes about the arc of your decisions, the long curve of your growth, the story you're writing, one disciplined moment at a time. I didn't understand that at first. Hell, it took me years of impatience, years of rushing, years of sabotaging myself because I wanted results faster than my character was ready to sustain. But compounding doesn't bend to impatience. It bends to consistency. And once I finally aligned myself with that truth, everything in my trading shifted. I remember a stretch early in my career when I'd gone months without a big win, just small, stable gains. The kind that felt almost invisible. The kind that made me question whether I was progressing at all. But then one morning I opened my trading journal and flipped back through the pages. Months of discipline, months of tight risk, months of controlled emotions, and something inside me clicked. The progress wasn't in the size of the wins, it was in the shrinking size of the mistakes. That's compounding too. Less damage, fewer setbacks, more stability. And as the setbacks shrank, my confidence grew, not the reckless confidence that makes you chase the market, but the quiet confidence that comes from knowing you can depend on yourself. That confidence compounded into patience. That patience compounded into clarity. That clarity compounded into better execution. Before long, I wasn't chasing big opportunities. I was attracting them. I wasn't forcing trades, I was recognizing them. I wasn't gambling, I was growing. And when the time came to scale up slowly, responsibly, I didn't feel fear. I felt readiness. That's the moment compounding reveals its second truth. It doesn't just grow what you have, it prepares you for what you're about to handle. Bigger size doesn't break the disciplined trader, it breaks the impatient one. Compounding made sure I wasn't the latter. As the years rolled on, I watched my account grow in waves that finally made sense. Not because I'd found some secret strategy, not because I'd cracked some hidden code, but because I'd finally learned to stop getting in the way of my own progress. The real power of compounding and trading isn't the math, it's the maturity. The ability to think in years instead of days, decisions instead of impulses, systems instead of feelings. And the deeper I went down that path, the more I realized something most traders never grasp. Compounding is the reward for surviving your own bad habits long enough to outgrow them. That's why so few traders ever experience it. They quit before the curve turns. They self-destruct before the growth accelerates. They sprint when the journey demands endurance. But if you stay, if you endure, if you honor the slow climb, one day you look at your account and it isn't the number that makes your hands shake. It's the realization that the kid you used to be could never have built the trader you've become. Because compounding didn't just happen in your equity, it happened in your mind, your discipline, your patience, your resilience. And that, kid, is when you finally understand the truth that took me decades to learn. Compounding isn't magic. It's the natural outcome of a trader who refuses to break, who chooses consistency over chaos, who shows up every day ready to take one small step in the right direction. And when you do that long enough, with enough humility and enough grit, the market eventually steps aside and lets you grow into the trader you were always meant to be. Because at the end of the day, compounding isn't the curve on the chart, it's the curve of your character rising slowly, steadily, honestly toward a version of yourself the old you would barely recognize.